Yeah, hello. I welcome you all to today's section of economics. We're going to continue with the foreign exchange market, and I urge all of you to drop your questions or your comments under the comment sections, and then I would attend to it. Without much ado, I would like to start immediately from where I left off, which was foreign exchange market. So stay tuned. Okay, thank you very much. Today I want to continue with where I left during our last session, which has to do with the functions of foreign exchange market. But before that, I would like to recapitulate, the explanations for foreign exchange market. Now, we agreed that foreign exchange market is a market where currencies are traded. Now, if anyone finds it difficult to understand what currencies simply means the form of money you are using in your country, the form of money you use in purchases of goods and services on daily basis, or payment for rent, for tax, for anything. It's what we call a currency. Now, currencies comes in different denominations, either in paper or in coin. Now, I would like us to look at the functions of a foreign exchange market. Now, some of the functions of a foreign exchange market is what? Function. Now, what is a transfer function? Transfer function has to do with transferring of purchasing power among countries. Now, what does this mean if we say transferring of purchasing power among countries? Now, purchasing power simply is the value of the currency that you hold in. So, if I want to buy something in the US, uh, the amount of money I will need from my country to buy that is what we call the purchasing power. In simple terms, let me say your purchasing power is when you want to buy. Let's take it for instance, you feel like you want to buy KFC, you want to eat KFC today, but the money you have in your pocket is not enough to buy maybe a streetwise two or any amount of KFC. Then we say that you don't have enough purchasing power to buy that particular goods. Maybe to buy maybe streetwise two would cost you about 30 rand, and then you have just about 10 rand in your pocket. So you don't have enough purchasing power to buy that. So if we talk about transfer function, which we have to talk about it, how do you call it, purchasing power, we simply mean the transfer of the value of the money we have in our country into other currencies. I don't know if this is clear enough. Yeah. I will take it again. Purchasing power is the value of the money that you have to buy something. If I want to buy a car and the price of the car is 1 million and I have just about 100,000, I don't have enough purchasing power to buy that car. Now, another functions of foreign exchange market is the credit functions. Now, we all know that one way or the other, we buy goods and services from countries, and sometimes you might not have enough cash to pay for these goods or services. Therefore, you will have to credit these goods. Now, credit function is the provision of credit in terms of foreign exchange for the export and import of goods and services across different countries of the world. Now, if I need to pay for any form of goods or services, I would need maybe the currency of that particular country in order to what? Pay for that good. So if I am importing something from New Zealand, Brazil, Argentina, I would have to pay in that currency. So if I have to credit those people, I cannot credit them with my country's currency, which is the Pula, Rand, Ghana cedis, or the Naira. I would have to pay for it in what? In my currency. And if I have to, to pay on credit basis, I would definitely have to pay, or that which means I have to buy the goods and later on pay for it. I would have to still pay for them in that currency. Now, another important function of a foreign exchange market is the hedging function. What do we mean if we say the hedging function? The hedging function means that you place a boundary such that your currency does not lose its value. Now, hedging function means protecting against foreign exchange risk. This is designed to minimize the risk of loss. Now, what does it mean? Hedging simply means that I wouldn't like to, sell something to somebody in the US for $10. If I sell that for $10 now, I would have to hedge against it so that in the future, if the dollar increase, it does not affect the minimum amount I have in my country. So hedging simply means just to protect your currency from devaluating. That is what hedging means. Now, what are some of the causes of demand for foreign exchange? Why do we need foreign exchange? Why can't we just, in our own country, use the currencies that we want? Now, one of the reasons is for import of goods and services. If I want to buy anything from Europe or from the US, I would need the currencies of that country to buy or to import those goods into this country. If I don't have it, I must have the equivalent in my currency to pay for that goods or services. That is one of the demand reasons for foreign exchange. Also for tourism. If I am a tourist and I'm living for Canada or for the US and I need to visit places of attraction, I cannot go there and pay in my currency because they do not spend that money in that country. Therefore, I would have to convert my currency into that of the US currency, into that of the British pounds, or into that of the euro. That is the only way I will be able to pay for services in that country. Now, another one is what? Unilateral transfer sent abroad. When we say unilateral transfer sent abroad, let's take for instance, I am living in a country, uh, you know, let's take it for instance, I'm living in Australia and I need to send money to South Africa, which is my home country, or to Ghana or Nigeria, which is my home country, you know, I would need to transfer or make payment in that country's currency. There is no way I will send Australian dollar to someone in South Africa. He can spend it unless he changes it into their currency. Also, we send money to friends and families abroad. If you have to send money to friends and families abroad, they would have to collect that money in the equivalent in their country's currency. Now, the purchasing of assets in foreign countries. If I live in a country and need to buy a house, a car, or a company in another country, I definitely would have to pay in that country's currency. Therefore, there is a need for me to either change the currency I have in order to pay for it in that country, or I would have to pay the equivalent of that amount in that country. So that is what we mean by purchasing of assets in foreign countries and a repayment of loans to foreign companies. If I have a company that does business with another company in another country, and we have done transactions, maybe I ordered for water purification machine from China, a company in China, I would definitely have to pay them in the Chinese currency, you know. I will definitely have to pay them in the Chinese currency. The currency in my country would not be worthwhile using or spending their currency. So therefore, I have to pay them in the Chinese currency or the equivalent in the Chinese currency. And another reason is speculations. Speculations simply means that where people would say that no, because let's say Queen Elizabeth has just passed on, and that is going to make the prices of the dollar or the euro to rise. That is speculations. The person is not so sure about it. However, it is just an assumption that because Queen Elizabeth has passed on, it is going to make the currency to rise or to drop. In any way, people will begin to maybe secure their currencies against the British pound. It's either they will sell their currencies or sell their products in order to have enough cash in case the value is going to drop, or they will try to buy more to avoid the escalation of prices in the future. That is what we call speculations. Now, before I close the topic for today, I would like us to look at the determinants of foreign exchange rate. The determinants of foreign exchange rate. What are the things that determine the exchange rate? Now we have when demand is equal to supply of foreign currencies, we also have the demand for a particular currency, quantity demanded or supply. These are the determinants of foreign exchange. Without much ado, I'm going to leave it here so that I don't get you confused. I don't get you too bored. My video does not become too long for you to comprehend. So I would like to stop this here and then I will continue this during another session. Thank you for watching and thank you for listening to this video. Thanks you very much.